Here's an example of a straightforward question. We read this first, target costing, not the most difficult of topics. And then we see only 2 sentences and the numbers are jumping out at me. Okay, so an easy question to process. This is an example of one that I would grab immediately. I wouldn't flag it and do it later. I would do it now. Before we read the story, we see target cost. So let's deploy the formula. We know we need a selling price set by the marketing department. Then we need a profit margin to make our investors happy. The balancing figure is the target cost for our production department. And we see that, look at this, the price, 550 and 800. So that's 550 units multiplied, $550 per unit times 800 equals 440. Profit is 30% of 500. That's equal to 150. Third thing to do is get a balancing figure. So the cost there would be 290. We know that we're doing 800 units. So now it's just a little algebra to work backwards and solve for x. X is 362.5. Of course, that's all rounded off to the 1,000. There you have it, a rather straightforward objective test question. Here we have a nice theoretical question, and we read the requirement first. Which of the following may be used to close a target cost gap? So which of these actions are going to reduce the cost gap, will help us reduce the expected cost per unit? And let's read more. A company is manufacturing multiple products using target costing. Only one of the products has a cost gap. Well, we can eliminate the distractors. Sometimes it's easier to eliminate the wrong answers and then try to find the best answer. And we can do that here. Well, overtime is a bad idea. That's just going to make our costs higher. Our cost per unit would increase. Not what we want. Raising the selling price. Target costing is a tool for production. The price is set by the marketing department, so we can't touch the price in a target costing exercise. Now we got 2 things left. Substitute the current raw materials with cheaper versions or negotiate cheaper rent. Rent is a fixed cost. It's not going to be linked to the product P's costs. So I don't like rent. Substituting current raw materials with cheaper versions. That's going to give me the quickest cost reduction. Guys, a lot of people get that wrong because they see the word cheaper. Cheaper also implies lower quality, and the books say we can't use lower quality because the price is set to the values, what is valued by our customer. You are 100% right, but cheaper is also linked just to less expensive. So this ambiguous word in this case is referring to less expensive. So if B was the only option there, yeah, we'd have a problem. But guys, by eliminating the distractors, we can arrive at B, and B is, okay, the best answer, full stop. So I go with B. Here's an ACCA classic, putting things in the right order. This presentation shows you the multiple choice version of it. In your real exam, it could easily be a drag and drop, okay? So that's more difficult. And whichever approach you're using, you're going to start with the ends. The ends are usually the easiest things to find. So we're talking about steps in target costing, and we know the first thing is to set the price. And do we have that as an option? Yes, we do. So this would be the first step. Now, the last thing is going to be what's the cost gap. We've done everything and then cost gap. So that would be the last thing to do. Now we've got to go into, if we were in multiple choice, Boom, we'd get the answer C. But you might not be, so you have to go a bit further. Well, once we set the price, then we get the profit. That would be the second step. Target cost is the balancing figure between the two. That's the third step. And then the expected cost per unit, that would be the fourth step. Okay? And that confirms that C is the right answer. Here's the last question of the set. It looks easy, but it's actually a little bit tricky, and this requires a deeper understanding of the concept of target costing. If you just had a very cursory glance at the notes, your course notes, maybe you missed this. Let me show you what it's all about. We're talking about which of the following techniques is not relevant to target costing. And I want to compare target costing, which is a modern approach, to standard costing, the traditional approach developed in traditional manufacturing, the end of the mass production era. And they are different. Target costing, modern; standard costing, traditional. In target costing, we are using the principles of Kaizen, continuous improvement. We can always improve things a little bit more. We can always reduce the cost per unit a little bit more. Now, value analysis, that's to understand what features of our product do our customers value so we can set the right price. Functional analysis, activity analysis, well, that helps us understand our process so we can engage in continuous improvement and we can reduce the cost gap through cost reduction. Guys, standard costing is the traditional approach. That's a top-down approach. Target costing is bottom-up. That's using our empowered workforce. The empowered workforce implements and suggests the improvement areas. Standard costing is a top-down approach. Management set a standard cost per unit, and then we use variance analysis to control performance. How much should it cost? How much did it cost? That one goes with standard costing, and it's about cost control, not cost reduction. So I would eliminate B immediately just by identifying variance analysis. Ooh, that's the old-fashioned bit. These other ideas, modern tools that go with the modern approach.